Hey guys, welcome back to the Web3 Daily Brief. Today's market vibe can be summed up in two words: sector rotation. Bitcoin had a brief breakout past 123K before cooling down and consolidating just above 120K. But the real story is Ethereum. It ripped past 3600 and is up nearly 50% just this month. Funds are clearly rotating out of BTC and into ETH and altcoins, with Bitcoin dominance falling to 62%, which has people screaming Altseason is here. Beyond the big three, coins like Solana, DOT, and SHIB are also pumping hard. BNB surged past 700 on major news, and XRP hit a 7-year high and even overtook USDT in market cap, grabbing the third spot. The whole market feels like it's back in late 2021, volumes up, volatility's back, and degens are all in. But this time, it's not just hype. We've got real narratives. US, crypto laws getting passed, Trump going full pro-crypto, and capital rotation from whales and institutions prepping for the next cycle. Just a quick reminder though, with great pumps come great risks. Don't go full degen, and set your stop losses. The hottest topic today? A US-listed pharma company, WINTree Therapeutics, just announced they're building a $200 million BNB treasury. Yup, not Bitcoin, not Ethereum, BNB. And not just holding it on the side, they're putting it straight into their corporate treasury. First time in history, we're seeing a Nasdaq-listed company openly say, we're putting platform tokens like BNB on our balance sheet. No wonder the whole crypto Twitter went nuts. Here's the rundown. WINTree is a cardiovascular drug company, ticker WINT. They announced a strategic partnership with a group called Build and Build. Phase 1, $60 million in stock purchases. Then, over time, up to $200 million in total will be allocated, all for acquiring BNB through various channels, including direct purchase and via BNB-focused trusts. Right after the news dropped, BNB jumped 3.5% and broke through the 700 mark. WINTree stock ripped over 20% during pre-market. But the real story here isn't the price move, it's the narrative shift. WINTree's execs say there's strong demand among US investors to get exposure to BNB, but no legit channels. So they're basically saying, we'll hold the bag for you, buy our stock, and you get exposure to BNB. It's a playbook straight out of MicroStrategy's Bitcoin thesis, but with a new twist this time. It's platform tokens in the spotlight. Crypto influencers like Wu Blockchain, CryptoRand, and the DeFi Investor were all over this on X. Some praised it as BNB's gateway to institutional capital. Others questioned whether WINTree, a struggling company, is just jumping on the hype train to pump its stock. There were even takes calling this a DeFi-wrapped IPO arbitrage move. But no matter how you slice it, the implications are massive. BNB is no longer just a utility token. When public companies start stacking it, we're entering a whole new valuation regime. If others follow suit, we could see a platform token re-rating like never before. This time, it's not Binance pushing the narrative. It's a Wall Street-listed company making the first move, and both crypto and TradFi are listening. The US House of Representatives just passed two massive crypto bills, one on stablecoins and the other on market structure, and they're now headed to the president's desk. If you're in crypto and not paying attention, you're going to regret it in 3 years. Let's start with the stablecoin bill. It's called the Stablecoin Transparency and Regulation Act. The key points? 1. Every stablecoin must be backed 100% by cash or short-term US treasuries, no funny business, no algo coins. 2. Issuers must publish monthly reserve audits. 3. Only federally or state-licensed institutions can legally issue stablecoins in the US. No more random DeFi projects printing fake dollars. Basically, this bill cleans house. It creates a uniform federal standard and gives USDC a tailor-made legal framework. Not surprisingly, USDC supply jumped 8% in 24 hours after the bill passed. Institutions love clarity, and now they've got it. Then there's the real heavyweight, the Digital Asset Market Structure Bill. This one finally draws a line between what's a security and what's a commodity. If your token runs on a decentralized network like Bitcoin or Ethereum, it's presumed to be a commodity. Only centralized, tightly controlled projects might still be deemed securities. This slaps back at the SEC's sue first, define later approach and gives the industry a clear, forward-looking rulebook. It also says crypto exchanges don't need to register as securities exchanges as long as they're only trading commodity class tokens. That's a game changer for platforms like Coinbase and Kraken. Compliance gets cheaper, legal risks drop, and the regulatory fog finally begins to clear. Markets are reacting with full-on optimism. Top influencers on X are calling this the biggest regulatory win for crypto in 2025, and some even joked the US SEC finally swiped right on crypto. What's wild is how bipartisan the vote was. Over 300 House members backed the stablecoin bill, which in today's political climate is basically a miracle. Yes, the bills still need the president's signature, but Trump's camp has already said they're on board. If signed, these would be the first federal laws in US history to fully recognize crypto assets as part of the mainstream financial system. And this isn't just about America. Once passed, these frameworks will likely become the global reference model for stablecoin and exchange regulation. Traditional giants like JP Morgan and BlackRock can move faster. US crypto startups that fled overseas might consider coming home. This isn't just another policy update, it's the ceiling over the industry cracking wide open. Trump's back with another power move, and this time he's targeting America's $9 trillion retirement fund system. Word is, he's preparing an executive order that could let 401k plans allocate to crypto. Yep, real money, pension money could soon be flowing into Bitcoin, Ethereum, even stablecoins. Here's the scoop. According to the Financial Times, Trump's team is drafting a directive that would classify crypto, gold, and private equity as approved alternative assets for retirement accounts. Right now, 401k plans are basically locked into stocks and mutual funds. Crypto? Completely off limits. But this new move could blow the gates wide open. Think about the scale, 9 trillion. Even 1% into crypto is 90 billion. That's not a pump, that's a liquidity tsunami. Even a trickle would be enough to kick off a sustained bull cycle. And more importantly, it signals that the US government might finally be ready to treat crypto as a legitimate long-term asset class. And this isn't coming out of nowhere. Back in May, the Department of Labor already reversed Biden-era guidance that warned against crypto in retirement accounts. Now Trump's going full send, potentially using presidential powers to formally greenlight crypto access via 401k. Institutions like Fidelity have already built BTC-friendly retirement plans, but few employers dared offer them without policy clarity. If Trump delivers that clarity, expect providers to push these products hard and funds to follow. On X, reactions are wild. Some say it's bigger than ETF approvals, while others joke Trump's plan is for Americans to retire on Bitcoin gains. Either way, this aligns with Trump's recent Web3-friendly rhetoric, and it pairs neatly with the House's recent pro-crypto legislation. If Trump's playbook is freedom and decentralization, this is a big chapter. Sure, there's pushback. Dems are worried about exposing retirement funds to volatile assets, but even the rumor of an executive order is already moving the conversation in both TradFi and crypto. Bottom line, if pension money's allowed in, that's the ultimate long-term endorsement, and possibly the beginning of America's own version of the institutional bull market. XRP is going absolutely nuts, and for the old-school OGs in crypto, this feels like deja vu from 2017. The price? 3.64, smashing through its previous all-time high from 2018. It's now the third largest crypto by market cap, leapfrogging USDT and sitting behind only Bitcoin and Ethereum. If you're holding, congrats. If you're not, well, it might be time to start sweating. But this pump isn't just hype. There are 3 legit reasons behind the rally. First, regulation is finally tilting in XRP's favor. The new US House bills on stablecoins and crypto market structure basically say that decentralized networks like XRP aren't securities by default. That's huge. On top of that, Ripple's multi-year lawsuit with the SEC looks like it's heading towards settlement. Both sides have started withdrawing appeals, people are betting the legal saga is finally ending, and once it's done, XRP could return to major US exchanges full force. Second, institutional money is entering the chat big time. Companies like Vivo Power and Weebus have announced combined XRP purchases of over 400 million for treasury reserves. This isn't marketing, this is actual capital deployment. If Apple or Tesla ever make a similar move, we're talking full-on fireworks. Third, Ripple is making strategic plays. They're launching RLUSD, their own fully backed US dollar stablecoin. They're also applying for a national trust banking license, a move that could let them issue regulated stablecoins at the federal level. Lawmakers in Congress have even publicly praised Ripple for leading the charge on US stablecoin standards. On-chain metrics back the narrative, transaction volumes are up over 120%, new wallets are surging, and DeFi protocols are migrating to the XRP ledger. TVL doubled in a week. Degens are rotating back in, and influencers on X are calling XRP the next institutional breakout. Of course, there are risks. The price has run hot, a pullback wouldn't surprise anyone, and if the SEC case drags on longer than expected, the hype could cool. But from a structural standpoint, XRP's now got legal clarity, institutional backing, and real products coming online. This isn't just a bounce, it's a comeback. XRP is no longer the forgotten alt, it's back in the heavyweight class. Bitcoin. OG. Adam Back just dropped a bomb on the crypto world. He's launching a publicly traded company called Bitcoin Standard Treasury, BSTR, and it's going public via SPAC with one mission, stack sats. BSTR isn't selling products, building apps, or launching tokens. It's doing one thing, holding Bitcoin over 30, 0 BTC at launch, worth about 3.6 billion. Once it goes live, it'll become one of the top 4 largest corporate Bitcoin holders in the world, right up there with MicroStrategy, Tesla, and Galaxy Digital. The move is being backed by Cantor Fitzgerald, a legacy Wall Street firm, and the company's going public through a SPAC merger. No ETF delays, no SEC headaches. Adam Back himself is leading as CEO, and he's injecting both his own BTC and early team reserves into the company. Some investors are even buying in via BTC-denominated pipes. In short, BSTR will hit the public markets already loaded with real Bitcoin on its balance sheet. It's not just a Bitcoin investment vehicle, it's a full-blown strategy play. The company will use IPO proceeds to buy more Bitcoin, and every dollar raised increases BTC per share. Sound familiar? Yeah, it's MicroStrategy vibes, but on steroids. Markets are paying attention. In crypto circles, it's being hailed as the smartest route to Bitcoin exposure yet. And for TradFi folks, it's cleaner than trusts and faster than ETFs. With a proper board, SEC filings, and public market access, it's a rare beast, a pure BTC play that's both regulated and tradable. But BSTR isn't stopping there. It plans to launch BTC-denominated debt instruments, offer treasury advisory services to other companies, and even help sovereign funds allocate to Bitcoin. This isn't just a coin vault, it's trying to become the Goldman Sachs of Bitcoin. Of course there are questions. What happens when one company holds this much BTC? Are we just re-centralizing the decentralized? Can Adam back deliver when Bitcoin inevitably dips? But the market seems to love it, and this might just mark the next big chapter in Bitcoin's institutional adoption. Bottom line, BSTR is trying to make Bitcoin the centerpiece of Wall Street not through lobbying, but by listing it on the damn exchange. Pudgy Penguins just took their NFTs to the next level not by launching a new collection, but by rolling their plush toys into Japan's iconic Don Quixote stores. That's right. Pudgy's physical toys are now stocked on shelves at Japan's most famous mega retailer. Think of Donkey as a mashup between Sam's Club and Miniso, with wild foot traffic and mass market reach. This marks a huge milestone for Web3 IP going mainstream. Pudgy Penguin started as a 2021 NFT darling, went through a rough patch, changed hands, and has since rebranded into a Web3 native IP powerhouse. Their secret sauce? Merge the physical and digital. Each plush toy comes with a QR code that unlocks a unique NFT character inside their official metaverse, Pudgy World. No wallet, no coins, no blockchain knowledge needed, just scan and go. Their Japan rollout kicked off in Nagoya and Utsunomiya, with plans to expand to over 600 Don Quixote stores nationwide. Day one saw customers snapping pics, posting on X, and marveling at the fact that their first NFT came free with a cute toy. And here's the kicker. The digital characters are minted on ZK Sync, a fast, cheap Ethereum Layer 2. That means each plush toy is literally a gateway to Web3, packaged in fuzzy cuteness. But Pudgy's innovation goes deeper. The designs aren't top-down from the company, they come from the community. Original NFT holders can submit their penguins via the Overpass platform to be selected for future toy runs and get royalties when their IP is used. This turns Pudgy into more than just a merch line, it's an open-source Disney model. The results speak for themselves. After launching in Walmart last year, sales outpaced legacy toy brands. Last month alone, Pudgy NFT trading volume doubled. While other NFT projects are stuck arguing about floor prices, Pudgy is onboarding the masses via stuffed animals. Their Japan launch is just the start. Korea, Southeast Asia, and Europe are next. The playbook is clear. Hide blockchain inside toys and make Web3 feel like magic, not code. Bottom line, Pudgy's not just selling plushies. They're selling Web3 identity wrapped in soft, adorable packaging. And for the next wave of crypto users, that might be the most powerful wallet of all. Crypto mining firm BIT Mining just pulled a wildcard move, and suddenly, Solana's the new institutional darling. Here's what went down. BitMining, a publicly listed company on the NYSE and formerly focused on Bitcoin mining, announced they're raising publicly $300 million to build a Solana treasury. Yep, not BTC, not ETH, SOL. They're not just buying tokens, they're going all in on Solana's infrastructure staking nodes, validator networks, even enterprise-grade custody tools. Their goal? Make Solana a strategic core asset for the company. And the market noticed BitMining stock pumped over 150% on the news, and SOL price jumped 4%, reclaiming 155. Why the pivot? According to the company, Solana's speed, low fees, and growing developer base make it the best performing loan for real-world applications. DeFi, NFTs, social apps, Solana's ecosystem is expanding fast, and BIT Mining sees it as a foundation for future revenue streams. They're treating SOL like a balance sheet asset and a business platform. They plan to stake SOL, run validators, build infrastructure, and offer enterprise onboarding services. In short, they're betting Solana will be the next Ethereum, not just for users, but for institutions. Crypto Twitter's divided. Solana maxes are thrilled, calling it a watershed moment, but skeptics say BitMining's just riding the hype to pump their stock. Others warn about Solana's past outages, which aren't ancient history, and question whether it's ready for prime time. But here's the bigger picture. For the first time, we're seeing altcoins, real altcoins, enter institutional portfolios. This isn't meme coin mania. It's strategic, capital-backed, and narrative-driven. If Solana can deliver on its stability and scalability promises, BIT Mining might be the first of many to take the plunge. So maybe just maybe SOL isn't a shitcoin anymore. It's becoming the first alt to break through the Bitcoin Ethereum ceiling. Today's market? It's all about one-word breakout. From policies to capital flows, from narratives to valuation models, Web3 is entering a new structural phase. a Nasdaq pharma firm buying BNB, Trump trying to let pension funds ape into crypto, Bitcoin, OGs creating listed BTC vaults. These aren't random events. They are signs that crypto is finally entering the mainstream asset pool. XRP's new all-time high? It's not just a chart milestone, it's backed by legislation, real institutional buys, and court settlements. Solana getting scooped up by a public company? That's not hype, that's a chain stepping into the big leagues. And while everyone's watching charts, Pudgy Penguins just walked into a Don Quixote in Japan, onboarding new users through plush toys and QR codes. That's not a meme, that's real-world adoption. So here's the question. Are you ready for a new kind of bull market? Not the kind driven by FOMO and speculation, but one powered by real capital, real policy, and real usage. Because this time, it might actually be different.